So, Alex, pretty unbelievable. Stock rose 20% yesterday off the earnings. Walk us through the earnings report. Obviously, good news. You beat on earnings per share and sales. You took away the outlook going forward. I understand why you did that. When you look through the numbers, what surprised you most? Break down the earnings for us.
Well, I think the response to yesterday's news was really about the surge in online shopping and the shift in consumer behavior. We were able to beat on the bottom line by a wide margin, largely because even though we were able to pull back aggressively on our marketing spend, our digital traffic signals surged, and we had record traffic growing double digits and record conversion to dealers. And so the pandemic is really driving a rapid shift to digital car buying and selling.
So I know that you had to withdraw guidance like so many companies have. I understand why you did it. It's hard to gauge. But what may not be hard to gauge is the trend. Do you think that this fast move to digital, thank goodness we all have computers and we were already sort of ahead of the game since we're all locked in our homes. Do you think the trend of shopping for a big ticket item like a car on digital platforms will continue?
Well, look, I think two fronts. On the consumer side, we think the pandemic has a lasting impact on the future of car ownership. The car now effectively is an extension of our home. And with the CDC's recent guidance that came out and said that the car is the only reliable, safe way to get about, I think what you're seeing is consumers still need to get to the store. They still need to get to work. And they don't feel safe getting back on mass transit or ride-sharing services. In our business specifically, we're an enabler for the auto industry. We are a solutions provider. We provide technologies to over 18,000 dealers across the U.S. and to car companies. And what the pandemic is doing to them is forcing them to adapt faster to an all-digital world. And so we're seeing strong demand by the industry to engage with our digital tools, move their business away from human experiences into more digital tools and connections.
Tell me about the subscription-based business model. Dealer counts, declines, how your company handles those payments.
Sure. Well, we do charge it's a SaaS-like business where we charge dealers a low monthly subscription to feature all their inventory on our marketplace, as well as we build websites and provide technologies for the industry as well, also on a subscription basis. And so typically very durable revenue, highly reoccurring, and low churn. In the second quarter, obviously, though, with the pandemic hit, we saw a huge pullback. And why our revenues were muted in the quarter is we knew that dealers were in a crisis. We stepped up and provided a stimulus package where we offered them a 50% discount for April, 30 in May and June. And now the discounts have moved off in July. So you'll see our revenue come back. And importantly, the dealers now have an even greater appreciation for our digital channels.
I understand what you're saying. At the same time, it's almost like commercial real estate. People are not working, they're not able to pay the rents. And, that was good. You gave a stimulus to give them 50% off or 30% off. But you're telling me now that's going to wane. I wonder if, you're going to have some pushback for that. Are you worried?
No, not at all. We've long been an advocate for the industry and been there with our dealers through thick and thin. I think what you're seeing reported publicly across all major dealer groups is they're reporting record profits. And again, I'll point to the service departments at dealerships generate the majority of their profitability. Consumers are not getting back on mass transit. They're not getting back on airplanes or even ride-sharing services. So they're getting their cars fixed and they're upgrading their fleets as well. So record dealer profits. And again, now they are leaning more aggressively into digital platforms and tools.
One thing that got, I said earlier that food got more expensive. I read an article last week talking that used cars got a little more expensive too, right?
That's right. There's an actual inventory shortage in the industry right now. Part of that's driven obviously by a pullback by the manufacturer's production, which we hope that they'll resume shortly. But that's part of the contribution to record profitability at the dealer level. There's not as much discounting to buy that new or used car, and gross profits are holding for sellers, further driving their profitability and giving them the ability to reinvest in their business.
Tell me about what you think about the different businesses within the autos. I mean, you talk about used versus new, electric vehicles. We could talk about ride sharing after. But what kind of trends are you seeing for what people are buying, what they want going forward? Because a lot of our markets look forward to 2021. Give us some trends in your forward-looking glasses.
Well, look, there's certainly been a lot of rebound in both the new and used car markets right now. And our platform allows users to compare and contrast new versus used, including certified pre-owned, which had a record month in June and is following that suit in July. I think what we're seeing is that with consumers looking to find the best way for them to get around, they're really relying on manufacturer incentives, which are actually starting to come down again for the same reason. There's a shortage of inventory. But used cars, selection, there's never been a better time to see all the new technologies and tools that are being put in today's cars. So the car is, again, really becoming an extension of our home. These are the one safe quarantine cabins that we can get out and about in and still feel relatively safe and secure. So consumers are, have plenty to choose from.
Yeah, and to your point, when the New York Stock Exchange reopened the floor for a select few traders to come back and trade, one of the precautions was no public transportation, right? So they had to all drive in from Connecticut, from wherever they were coming in to get downtown to Wall Street. So you're on point with that. They've since, been able to take the subway now, but that was something very interesting. What do you think about the world of electric vehicles and some of the projections about how the growth the trajectory of growth for EV, as everybody's so hot on Tesla and where is Tesla going? You don't have to comment on Tesla specifically, but the world of EV, is it going to be really different in 10 years for us?
Well, look, we think there is still good demand for EV vehicles, but we're still talking about single-digit percentages of the overall market. We get real-time search visibility in terms of consumer demand, in terms of all makes, models, and segments. And while EV continues to grow, it still remains a single-digit share of the U.S. auto market, and we don't see a massive acceleration in that trend. We think it'll be a growing trend, but not nearly to the degree that some of the pundits are making it out to be.
Well, it was an interesting trend when oil was going up and gasoline was expensive. And this may compare because now people won't have the jobs. They'll have less money. They may not want the gas guzzlers. Remember, there was a time that everybody was trading in their big trucks and getting smaller vehicles. I know you remember that. Today, we were hearing from Ford, the revenue beat. Right? People are excited about the new Ford Bronco, the Ford F-150, best-selling truck in America. All of these things are really exciting. But at the same time, do you think we'll see a trend where people may move to smaller vehicles because the economy is going to have a tough time recovering?
Well, look, trucks are part of the fastest growing segment in the U.S. market today, and Ford being a beneficiary of that trend as well. But we're seeing growth across all segments. I mean, we had 144 million visits during the quarter, double-digit growth year over year on traffic. And so we're seeing also the highest conversion of that traffic. People aren't just kicking the tires. They are wanting to engage with sellers and get pricing and monthly payments. And so we're seeing that trend across the board. I think, importantly, consumers are not wanting to get back onto the mass transit or ride-sharing services. And so we think this is going to be a durable, lasting trend. We don't think this is a short one-quarter pull forward. We see about 90 days forward, and we see a healthy auto market for the summer months.